one in Cyprus. It has been a great and very insightful event. Thank you, Capt, for organizing this, and thank you, Nicholas, for inviting me to moderate this discussion, which has to do with the marine insurance and reinsurance sector, and raising the question where it's heading. I'm honored to have with me three distinguished professionals who will help me with the discussion. We have Captain Eugen Adami, Mr. Tsakiris, and Mr. Stephen Cooper. So, in order to facilitate the discussion, I've prepared a short list of questions aiming to touch on three areas: risks undertaken by insurers, performance, and operational efficiencies or inefficiencies. So, if we start with the first area, risks. If you look at the International Union of Marine Insurance (IUMI) policy agenda, there are 15 items which are of concern to insurers. I'm going to touch on two of those. On the fuels one, which there has been an extensive discussion already, and on the cyber risks one. I understand that machinery damage is by far the most frequent cause of loss in marine insurance, and I also understand that the numbers are likely to increase with the introduction of low sulfur limits and the installation of scrubbers, for those, of course, who will decide to install scrubbers. Captain Adami, can I have your views on this, and do you believe that this will affect premiums with regards to insurers?
Yeah, I mean, premiums are normally driven by the statistic of the company. So you look at the premium you pay against the claims you produce. If you produce more claims than you pay in premium, by default you will have higher premiums to pay in the next year. A new technology being added to ships' equipment will, of course, trigger a higher probability of having more claims. That is beyond any doubt. New fuels are a problem in itself, and with regard to scrubber technology, we should not debate this because that was done a lot. But there is an element of vessels not being compliant when the scrubber has a problem, and they have then basically to use a high sulfur fuel to just reach to the next port. And that is a potential problem for fines. And it's also a potential problem for the seafarers coming under pressure to hide that actually fault in the scrubber. So we are ending up a new element of risk here, which the P&I underwriters have very carefully to assess. And I believe there is grounds for higher premiums there.
Mr. Tsakiris, from your point of view, from the insurers' apologies. Mr. Tsakiris, from the insurer's point of view, how will this affect your business and your pricing policy, and what actions are you taking actually not to deal with this issue?
Thank you very much. IMO 2020 is an issue that has been very, very well addressed, and all the possible implications against the ship owners have already been dealt with. Therefore, the ship owning community is very well versed of what to expect by using these fuels. We as underwriters, unfortunately, we cannot actually do something proactively on that. We have to wait for the claims to happen, and then we will be able to price any potential risk. However, this particular regulation is not just so simple, because it requires an amount of diligence from the owners, which requires testing on board the vessel, new ship management procedures, which will not make as easy as it is an insurance claim. To be fair, if IMO 2020 and the low sulfur fuel generate a series and a litany of claims, most probably this will be something that you will exclude eventually the handling machinery underwriters of insuring. On the other hand, another factor that needs to be taken into consideration, the use of scrubbers will be part of the equipment of the ship. Therefore, it will have a direct effect on the insured value of the vessel. The insured value of the vessel meaning that more premium is to be paid. In brief, IMO 2020 is not good news for ship owners. It's more money to be asked for. We understand that port state control will be looking over the shoulders of all the owners. And to be fair, underwriters rely totally on port state control and classification societies to see if the owners are compliant or not.
Thank you very much. Mr. Cooper, as a consultant with a wealth of experience in the industry, what would you advise your clients on this matter?
While there is abundant literature on preparing for the operational and financial impact of the approaching IMO low sulfur fuel mandate, but within all of this advice, there is seldom a mention of insurance, and this is not wrong. Insurance will not help you decide the best operational solution for your vessels or assure you that your efforts to be IMO 2020 compliant will be successful. But the reality is, with all the new regulations fortified by the strength of the global environmental sensitivity, there will be more allegations of non-compliance to defend and more opportunity for loss for which you may or may not be adequately covered. For those companies with public equity or debt, you will be challenged to demonstrate that you have adequately disclosed and accurately described your company's environmental vulnerabilities. And allegations of non-compliance can expose your company financially, and with environmental and pollution regulation, it can expose your managers, directors, and officers to personal financial loss. Pollution is an area within many of your current insurance programs where there are abundant exclusions. In some cases, the exclusions are explicit, but in many cases, they are subtle and even hidden. So my recommendation is it is a good time to speak with your broker and work with a competent insurance wording technician, as well as coverage counsel. Make sure your expectations concerning protections are accurate and that your assumptions concerning risk transference are shared by your insurers.
Great, thank you, gentlemen, for your valuable comments on this area. Another item that seems to be gaining more and more interest, not only in the shipping industry but across industries, is cyber risk. And it's also on the policy agenda of the IUMI. Technology is playing an increasingly important role in shaping the future of the maritime world, and the growing use of technology and reliance on information technology obviously exposes companies in cybersecurity threats. So, Mr. Tsakiris, from the insurer's point of view, is this a risk that worries you? Is this a risk that is reflected already in your pricing?
Cyber risk is a topic that requires a lot of technical background and knowledge, and I want to be totally blunt on the cyber risk. I think that cyber risk is considered that usually the major understanding is that somebody will attack softwares or servers or something. It's going to be a malicious act against the systems of the company or the ship. However, cyber risk on insurance terms is also the use of the systems, the use of the computers, the use of the softwares. Therefore, it boils down to the competence of the crew that the owners are employing. And to be fair, it's a new discipline that the crews have to understand and learn. And there is a new ground of further negligence of the crew to take shape on board the ship. Therefore, of course it increases the risk, But on the other hand, it doesn't actually change the nature of the risk itself on board the vessel, which is how to operate the vessel. We had a case, for example, they had wrong readings on the computer, they didn't pay any attention, they kept resetting the system till at the end the engine failed. And salvage and blah, blah, blah took place. Therefore, this is classified as cyber risk, for example. This is not classified in our views and as American Hellenic as cyber. It's pure competence of the crew, how to handle any new system that comes on board the vessel.
Thank you. Mr. Cooper, can I have your point of view on this as well? Thank you.
As with IMO 2020, there is no shortage of advice on how to achieve cyber preparedness, and insurance will not help you to avoid an incident, whether it is at sea or land-based, but it will help you reduce loss when your preparations fail. Presently, there are opportunities in cyber coverages, as marketers seem to be dominating over the underwriters, with renewals showing some softness and carriers offering expanded programs in an effort to retain business and add to market share. Surprising though, we've learned that the take rate remains modest, with only about a quarter of offers resulting in orders. And for those owners and managers who have decided to defer insurance, there is no reasonable argument to not immediately secure the experts and specialists required should your company be victimized. This means competent legal assistance to manage a response, data security experts to manage forensics, and crisis managers to mitigate client loss and unfavorable publicity. There is always a fear of interrelated and cascading losses, and these experts will be scarce in the event of a catastrophe. This type of preparation and some idea of potential costs will enable you to make a good economic decision concerning insurance. And as with disclosures concerning environmental exposures, cyber has made it to the boardroom, and claims of inadequate and inaccurate cyber exposures can result in a very costly and potentially uninsured defense.
Thank you very much. Captain Adami, can also have your views on this?
Yeah, I will be a bit brief on that. I believe cyber security is a big buzzword, and we have to look at it holistic, and we have to break it up in areas where it can tangibly affect our companies. That somebody goes onto our servers and steals our data or immobilize our machines, as Ilias mentioned, is not a specific risk only for shipping. This is actually for every company who has a computer system. And for that, most likely, worldwide, we will see in the future a product like a household insurance or a theft insurance, where you can get coverage for such a situation. At this very moment, I would not be too scared that hackers take control of a ship and drive it on the rocks. I would rather be worried about the new development about smart contracts as a result of digitalization, where we introduce new technologies like blockchain in order to get rid of old habits like a bill of lading, because now we are talking about serious money and we talk about little transactions. There are only about 2.5 million bill of ladings traded per year, but it covers all the money which bulk carriers and tanker vessels transport. So if we go blockchain technology, smart contracts, and we have not proper cyber security, we allow hackers in a very, how to say, not easy is the wrong word, but in a very attractive way to get quick a lot of money. And that we have to consider when we talk about P&I insurance.
Perfect. Thank you very much. And we'll come back on blockchain and digitization later on. Thank you for that, Captain Adami. Now, of course, the list of issues on the IBMI participant is long. Allow me now to switch to a different area and talk a little bit about performance. According to Gallagher report, and I'm quoting, marine health insurance is a repeat offender in terms of results, and a number of Lloyd's syndicates have announced modifications and withdrawals of their offerings in this area. Mr. Tsakiris, can you have your views on this and help us understand the current environment in the Hellenic machinery insurance sector?
Hellenic machinery insurance has been losing money for its stakeholders for the last 20 odd years. The reason being fairly simple: there was overcapacity, there was plenty of underwriters offering exactly the same product, and as you can understand, competition drives prices down. However, this hasn't had any. This didn't have an effect also on the claim performance of the assureds. Therefore, claims kept happening, and because of the actual premium value, the actual value of the premium being lower, loss ratios were increasing. It happened a series of losses, like we had some hurricane losses, because we're discussing about the cyber and IMO in 2020 and everything. But believe me, the major risk that Hellenic machinery underwriters are facing is the natural catastrophes. Therefore, we had the Irma, the Henry, and the Maria in 2017, resulted in almost $1 billion of losses in the yacht insurance. And the last one was in September 2018 in Larsen, the Larsen yachts, where we have a single loss of 650 million euro yacht loss. It's bigger than the Costa Concordia. For some, this was the trigger that Lloyd's and London market actually decided to change their pricing policies. For us, it makes sense now that prices have to rationalize. The only problem that I see now in the market is that owners, again, will be faced paying the bill. There is a lot of topics there, and they keep asking more money from the owners. Unfortunately, Hellenic machinery is one of those areas that this year is their year. It's a seller's market this time. The underwriters, is their turn to ask for more money. What I can actually suggest, though, is that prudent and owners, that they take good care of their vessels. They shouldn't be worried about this particular trend. Loyalty and good performance will always be rewarded by underwriters.
Great, thank you very, very much. Mr. Cooper, can I have your views?
Yes, although claims levels remain benign, the withdrawal of capacity should not be a surprise to anyone looking at the inability of the industry to impose any sort of pricing discipline. There is no relief coming from the investment side, as well as most carrier portfolios are seeing very, very low yields. The continuing influx of new innocent capital to the fixed price markets will likely result in continued softness and additional exits by syndicates experiencing continuing losses. But capacity continues to be bolstered, with fresh capital seeking non-correlated returns. With interest rates now receding from 2018 highs, we'd expect for continued global liquidity to thwart efforts for more rational pricing. Financially distressed owners will find attractive bids to be scarce. But I agree, we would expect to see some rotation as owners with sound financials are able to move business in response to concessions.
Thank you very much. And Captain Adami?
Yeah, I share the view that the smaller amount of syndicates being available, the more difficult it becomes. And the answer from a ship owner's perspective here is be alert and make sure that you have, in the year to come, even better loss prevention programs. Train your crews better, be prepared for higher premiums, and that goes for Hellenic machinery as well as for P&I, although this is not the question of the syndicates. But we all know that the P&I clubs realize less and less profits from their asset investments, and they have problems with paying the claim. So the answer to that is only call to the members and ask for more premium. So my message is step up with loss prevention programs, talk to the underwriters, both P&I and Hellenic Machinery, get the clauses right, and be prepared for higher premiums.
Great, thank you for those messages, and thank you for all the comments, gentlemen. Now, one last question from me. Before, I'd like us to watch a video, and then I'll raise my last question. Thank you.
Imagine a different kind of insurance industry, where everyone in the value chain has the same information, can trust its accuracy, and share it easily, with world-class encryption providing security, and an audit trail to underpin governance. Today, it feels a long way off. Look at the world of marine insurance. One of the earliest forms of protection, the sector's become a $30 billion global ecosystem. But with so many parties interacting constantly, duplication, inefficiency, and a lack of data are acute challenges. And with multiple jurisdictions and multiple regulators, change is hard. But change has to come, because rates are under pressure. Costs are becoming unmanageable. Compliance is challenging. Errors and fraud are common. And growth is harder to find. Marine is changing. We're seeing new business models, new operating models, new alliances and mergers. But what if claims could be paid in hours instead of years? If premiums could be agreed and settled in seconds? If insurers could see the values of their risks in real time? If brokers could become risk innovators, leaving administration behind? The challenges and opportunities we see in marine insurance manifest themselves in different ways across the global specialty insurance market. In each ecosystem, everyone wants to find a better way of doing business. But there's a fundamental barrier in the way of change, and it's one we can only overcome by working together. To become more efficient, to allocate capital better, to innovate faster, and with greater confidence. Everyone in specialty insurance needs easy, secure access to timely and accurate data. This is what blockchain delivers. A secure, distributed database that connects everyone in the value chain. Blockchain standardizes data on one platform and provides transparency for everyone in ways that open the door to greater efficiency, better compliance, and a secure audit trail. EY proved the concept. We are now building a platform that connects client exposure data to brokers and insurers. It will automate pre- and post-placement activities, including contract creation and declarations through the use of smart contracts, and accelerate premium collection. We've got the market and industry experience, the capabilities, the independence, and the trust needed to take the platform to scale. We understand the business challenges, from data standards to user adoption, and we have the technical knowledge, from business process design, regulatory alignment, to smart contract development. Now we're working with the industry, so we can all work on a shared answer to our biggest problem and our greatest opportunity. Together, we're finding ways to use blockchain to transform insurance. Join us today.
Looking at that video, the message I get is that there are inefficiencies in the marine insurance sector. So my first question is, do you share my view that there are inefficiencies? And if yes, do you believe that solutions based on new technologies like blockchain is the right direction for consultants like us to start building on? Ms. Kuba, can I start with you?
Yes. I would like to share that I find that video inarguable. Although when it mentioned inefficiencies, I took it kind of personally and inspiring. I think upon my return to New York, I will look into retirement or perhaps learn another trade so that there will be less inefficiency. None of us engaged in the risk trades works as we did, in my case, as I worked 40 years ago. In fact, the tools we have today are different than those available 5 years ago. At its simplest, we are all engaged into putting capital to its best use in the promotion of commerce, and that hasn't changed since the first venturers had a need to share the risks of voyages, vessels, and cargo. We must embrace the tools that will let us do it better, even if we don't understand them. Every element of my clients' programs can be accessed with this phone, but proposals still require wet signatures and days to complete while we collect data from remote sources, along with making the unavoidable errors. Our clients will certainly benefit if we can learn to do it better.
Thank you very much. Mr. Tsakiris?
It's interesting to see that and the human effort to try to put a system in that actually we can actually all monitor vessels and performances. And my only argument on all this technology is that there is no element, where is the skill of the ship owner that we insure? Where is the legacy that he brings into the business? Of course, I understand ships are things and can be actually measured and everything. However, we will have another method of fraud. We will have another method of non-disclosures against the underwriters. Marine insurance is based on good faith, and if good faith is not observed, then we don't have a contract. All this technology helps a lot in making faster and quicker decisions, but doesn't actually take away the skill and the art that marine underwriting carries.
Captain Adami?
Yeah, digitalization, artificial intelligence, and blockchain technologies are used as buzzwords today, and we have to define, first of all, what it is of this technology which can influence our activity, our company activity, be it now a charterer or be it a ship owner. If it's a ship owner and we introduce blockchain technology and smart contracts, we have at the same time to be extremely careful with our CO2 footprint, because the shipping industry is not only mandated to implement the 2020 sulfur cap. Yeah? We are mandated to be decarbonized by 2050, and we have to reduce our carbon footprint by 2030 by 40% through operational measures. How on earth can we embark on a journey which brings us higher electricity consumption and enlarges our footprint? So we have to be very precise what we are doing, and we should define on a piece of paper in the boardroom where we would like areas to be improved, and give that piece of paper to the IT experts to try to develop a concept. And that concept then should go to our good brokers in order to price the insurance package for them.
Thank you very much, gentlemen. I think due to the interest of time, we should call it a day. Thank you very much. I'm good, thank you.
Thank you, everybody. Anyway, thanks for joining the panel. Are there any questions from the audience? No more questions in that case, then thanks very much for your participation.